Today, we're going to take a look at a report from Headset for Arizona, Montana, New Jersey, and South Dakota. Kind of give us an idea of what that legalization is going to do for not only these states, but the industry as a whole. Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast. So today we're going to take a look at a report from Headset and dive into the four states that legalized. So again, we're going to take a look at Arizona, Montana, New Jersey, and South Dakota to kind of see what legalization and adult use cannabis markets are going to do, projecting just how big those markets will likely become. So many different ways to forecast these trends. We're going to choose a simple per capita spend assumption. So looking at the trends in the current adult use states to determine the sales volume in each of those states controlled for the total population of the state. And then we can apply a few of these per capita sales trends to the population size in the four new adult use states to come up with an average. So starting off with the annual cannabis sales and population by state, looking at the annual sales of cannabis for September of 2020. So we can see that the state total cannabis sales and population size don't necessarily correlate. Per capita spend is the highest in Colorado and lowest in Illinois. However, Illinois market is new this year and growing substantially month over month. Washington sales were adjusted up by 35%. That's the amount of excise tax paid by consumers at the register. All other states include excise tax in their sales totals. So totals include pre-sales tax, post-discount, sell-through sales, and adult use cannabis with the exemption of Oregon and Michigan, Illinois, which include adult use and medical. The per capita sales in the current markets, using data from the prior graph, we can find that per capita sales in each market. So we can establish markets in Washington and Colorado that have a higher per capita sales than newer markets like Michigan and Illinois. This is due to new markets still working to increase production for supply being able to meet the demands, as well as delays in licensing for those that are currently experiencing that in Illinois. A lot of delays, which is totally normal, very slow rollouts. Even Canada saw that. So kind of on trend. So Headset believes that these per capita totals highlight the growth opportunity in California over the coming years as more licenses are issued and companies are better able to suit the needs of the cannabis consumers, as well as recruit spending into the regulated channels from the illicit market. Moving on to per capita sales and year over year sales growth. Even in states with high per capita spend, we can see excellent year over year growth, suggesting that the per capita spend is likely to continue to grow in states like Washington, Colorado, despite their large lead. Comparing September of 2019 to 2020, we can see that year over year growth in all markets was in double digits. Nevada had the lowest growth due to mostly the effects of the pandemic on travel to Las Vegas and Clark County, accounting for 80% of the total sales in Nevada. The cannabis market projections for legalized states, we can use the per capita sales from other states that project what Arizona, New Jersey, Montana, and South Dakota annual sales will be in 2024, with the assumptions that there will be 3 years of sales by then. These projections don't adjust for cannabis tourism, specifically in New Jersey. We can accept a large sales volume to occur in border towns with New Jersey and Pennsylvania unless there's a legalization in those markets. So believe that there's likely a forecast to assume per capita sales at about 260 annually 3 years after the market opens. So this is similar to the sales capita in Nevada and Washington today. So in the first year, Michigan's already annualized at $115 per capita and continues to see growth in new licenses as they're issued, giving these four markets a forecast of $4.5 billion in annual revenue. So the range of projections includes a low forecast of 105 annually per capita, which is similar to what we're seeing in California. So this scenario is more likely if states are slow to issue licenses and restrict outside investment or have difficulty increasing production. So a high forecast using the assumption of $350 annually per capita is similar to sales in Colorado. So it's believed that it's possible if states are able to quickly issue licenses and companies are allowed to rapidly build facilities. In states like Arizona, where there's a robust medical market, it's believed that these numbers are more likely to be achievable. Hopefully these states have figured out how to roll out a lot faster and not take 20 years like the West Coast did, with California opening in 96 but not really allowing for a complete regulated market until more recently. So there has been a dramatic shift in the time frame that it takes for companies or states to establish their rec model after passing a law. So that went from approximately 40 months down to just a matter of weeks. So hopefully some of these states will figure that out. I know New Jersey is broke, not as bad as Kentucky, for example. And just like any new rollout, the amount of sales is going to increase dramatically. You saw that in Illinois and Michigan. Basically, anytime there's a new rollout, you're going to see a massive amount of spending, and especially as lockdowns reoccur, if they happen again, uh, any new state is going to go out and buy a ton of stuff. They don't want to end up like Massachusetts, which was deemed non-essential, the only marketplace to have that issue in the US. And so to avoid that, I have no doubt that patients and consumers alike will run out and just hoard products, especially in those new rollouts. So Arizona, New Jersey, North Dakota, um, or Montana and South Dakota, that is, those states will all end up hoarding a bunch as the pandemic kind of goes through round two this winter. And as mentioned, the tourism is definitely an issue. So, as long as that those states aren't relying on tourism to the extent that Nevada does, they won't have as much of a decline or a resistance to sales that we've seen in other regulated rollouts. We might see that Arizona and South Dakota, New Jersey and Montana might have sales that initially start off looking like Colorado, and then probably trailing off to meet between Washington um, and another state, maybe California, kind of depending on what New Jersey does. New Jersey has an opportunity to sell a lot of cannabis to next door states like New York, for example. If New York doesn't legalize right away, obviously New Yorkers are going to come into New Jersey and buy it and bring it back to where they're at. So that'll increase sales until New York has their own model. But it all depends on how they roll that out, because if there's restrictions on out of state investors, or lack of advertising on billboards, or a shutdown, not deeming them essential, obviously those sales will suffer dramatically, just like we saw in Nevada that requires heavily on tourism. Washington State, on the other hand, has been relatively flat because we don't have tourism, haven't really relied on it, and it's just been kind of this steady market during the pandemic, whereas pre-pandemic it wasn't a great market. But the fact that they've had steady sales and haven't dipped at all makes them look like a relatively good marketplace, even though there's been people that have left, like Willie's Private Reserve. Willie Nelson's company left Washington, wasn't good enough for him, but that's an entirely different podcast. With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.